you tired of being unprofitable? Have you been putting hours in studying ICT concepts and still stuck at break even? Well, you're not alone, and there's a reason for that. In this video, I'm gonna bridge the gap between knowledge and profitability so you can start seeing success in your trading. If you don't know me, my name is Jeffrey Rodriguez or JRod Forex, and I've been trading ICT concepts for the past 8 years. Make sure to stick around to the end of this video because I am going to be giving you guys access to my simplified trading framework that helped me become profitable. Many traders think that they understand ICT concepts, but they fail to apply it properly. Here's what I mean. So you may think you understand liquidity pools or market structure or fair value gaps or inefficiencies, but if you don't truly understand it, then you're doing something wrong. And this could easily lead to unprofitability or even worse, stuck at break even. Now, I'm not saying break even is a bad thing to be stuck at. It's much better than being unprofitable for the long term. But in order to course correct and come out of break even or even unprofitability, you have to really learn to master these concepts. So I really recommend, if you guys don't understand truly what market structure is or what liquidity pools are, fair value gaps, order blocks, any of ICT concepts, that you really spend the time and the effort putting in so that way you can truly understand and master each specific concept so you know exactly how to start applying it to your trading. My personal favorite ICT concept is the fair value gap, and that's what I use in my own personal trading model. And I really would recommend starting there if you are looking into other different PD arrays that ICT shares. You have things like volume imbalances, rejection blocks, order blocks, fair value gaps, a whole plethora of information in terms of PD arrays. But in my personal opinion, and even from what ICT has shared, the fair value gap is one of the most powerful concepts that you can use. So again, before you even get into live trading, one of the things that you really want to put a heavy emphasis on is making sure that you master the art of the specific PD array that you're using in your trading. One thing you guys need to remember is your biggest enemy in trading isn't the market. It's your lack of patience and discipline. Most people tend to jump around from strategy to strategy. Maybe you've seen ICT concepts, maybe you've seen a cup and handle pattern, maybe you've seen a break and retest pattern. But in all reality, you're not going to find success in your trading until you actually stick with one strategy for the long term and build rules around that strategy that you can follow. So that way, when you go into the market, you have a plan. Before you sit down at the charts, you should have a plan. Before you set your stop loss, you should have a plan. Before you set your take profit, you should have a plan. You need to have a plan for everything in your trading in order for you to find long-term profitability in the markets. And if you don't do this, you're gonna be stuck at break even, or you're gonna be stuck being unprofitable, and you're gonna be spinning your wheels just trying to find a way to make money out of the markets. And the simple answer is just embodying patience and discipline when it comes to trading. Most importantly, one of the things that everyone should be doing is make sure that you're journaling every single trade that you take. Not just after you close out the trade, but more importantly, before you go into the market. You should know exactly what your plan is. Are you bullish? Are you bearish? What specific liquidity pools are you waiting for to be hit? What specific PD array are you going to use to enter? Where's your stop loss going to be? What is your risk management strategy? And this is arguably one of the most important components, because if you don't have proper risk management with your setups, you can easily over leverage and you can easily blow your account in 1 to 2 trades. My biggest tips for embodying patience and discipline when it comes to the markets is making sure that you're taking fewer trades, you're not over leveraging, you're focused on high probability setups, and most importantly, you are journaling every single trade that you take. Over leveraging might seem like a shortcut to extract big profits out of the market, but in reality, it's the fastest way to wipe out your account. Poor risk management oftentimes is the #1 cause for traders to actually fail. And what I mean is you can go into one trade risking 2, 3, 4, 5% even, and let's say you take a loss and you immediately double your risk. Now you're risking 10% on that trade. Well, if you take 2 losses back to back, you've just given up upwards of 15% of your account back to the market. So without a proper risk management plan in place, it's very easy for you to over leverage and wipe out your account extremely fast. So this graph right here is showing you guys how leverage impacts the account balance over time. and the leverage increases 1 time, 5 times, and 10 times the account balance, experience greater fluctuations. So you can see here with the 10 times leverage, it quickly leads to a wipeout. For example, you take 8 trades and your account is already wiped out. Now, if you look at 5 times the leverage, by the time you're at 10 trades, your account balance has decreased, but at least you still have more of your account than if you were risking 10 times the leverage. Now, if you look at this and you're only risking 1x the leverage, you can have significantly more trades and last a lot longer, and that's the key to this game. The key to this game is making sure that you're in it for the long term, not just quick profits, not putting everything on one trade, trying to extract as much profits as you can, but really focusing on longevity. That's how you stay profitable for a long time. If you're just getting started out trading, I highly recommend using between 0.5% and 1 full percent in terms of your risk, and ideally aiming for 1-to-1 or even 2-to-1 setups. That's a simple bread and butter approach that you can apply to your trading that will allow you to continuously extract money from the market without ever having to over leverage your account. So again, just to recap, between 0.5% and 1 full percent, aiming for 1-to-1 or 2-to-1 setups, and you really want to make sure that you're doing the proper math. So if you have a $50,000 account, make sure that you're only ever risking between 0.5% and 1 full percent in terms of any trade that you take. This is going to keep you profitable in the long term and prevent you from ever over leveraging. I know we talked about a trading plan a little bit at the beginning of this video, but it's extremely important for you guys to understand that if you want to be profitable in the long term, you have to have a strategic trading plan that you follow every single trade that you take. And if you're unprofitable right now, you probably lack a consistent trading plan. You're probably switching your rules, switching the different types of strategies that you're using, and this is not a good recipe for success. You're most likely taking random trades and seeing inconsistent results. And in reality, what you need to do is have a time where you execute your trades. For example, what session do you trade? Are you an Asian session trader, a New York session trader, a PM session trader, a London trader? You want to identify the session, and then after you've done that, you can start building rules around that. What specific time do you want to execute in the market? For example, if you're a London-based trader, you may be looking to execute between 3 to 4 a.m. Eastern Standard Time. If you're an AM session trader, then you may be looking to take your trades between 10 and 11 a.m. Eastern Standard Time. Once you've figured out what session it is that you want to focus on trading, you need to have a good entry model. And I've mentioned fair value gaps. That's my personal entry model, but every single trader is going to be different. You may resonate more with taking an order block, or you may resonate more with taking a turtle soup. But the most important thing that you can do is really hone in on one specific PD array that you use for your entry technique in the market. So that way, if you're trading in London, you're only looking for a fair value gap during London. If you trade in the morning session, you're only looking for a fair value gap in the morning session. And this should be constant. These rules should never change. Otherwise, there's too many variables at play that can cause you to not be able to track your results consistently. The last 2 things you guys should be focusing on in terms of a consistent trading plan that you can start applying is your risk management strategy as well as your stop loss placement. Both of these go hand in hand. If you don't have proper stop loss placement, then you're easily going to over leverage your account if you have a 200 handle stop, for example. But you want to have clear protocols on what these rules are, so that way when you sit down at the charts, you know exactly what to do, exactly what session, exactly what entry model, exactly what risk management strategy, and exactly where your stop loss is going to be before you ever get into any single trade. All right, so in this video, we've broken down everything you need to start becoming profitable. We've covered how to master ICT concepts. We've covered clear risk management strategies and protocols that you can start applying to your trading. We've covered patience, discipline, and most importantly, sticking to a solid plan. So if you guys found value in this video, don't forget to leave a thumbs up. I want to know your biggest takeaway though, so drop your biggest takeaway down below in the comments. If you feel stuck in your trading, or you're unprofitable or break even, go ahead and click the link down below in my description for a simplified trading framework that you can start applying to your trading today.